We just saw the stock market test a particular level 4 days in a row and reject. And there's going to be some clear zones that must be reclaimed absolutely as soon as humanly possible. Otherwise, if not, what we're going to see is probably continuation towards the downside, which we'll discuss in today's show. Smash the like button, hit the bell notification, and subscribe to the channel if you're not already subscribed. Let's get straight into it. Mantra putting in a little bit of a bounce over here, but I will remind you, this is a very, very highly risky play following that massive dump towards the downside. So if you are playing this over here, understand that you need to be playing it as a short-term trade, right? It's very, very, very unlikely that you're ever going to see Mantra come back up towards any of these highs, especially even that breakdown level, right, which occurred around that $6 to $7 mark. Very unlikely you're going to see it back there. So please do be careful, right? It's all eyes on the stock market as it's going to be opening up later today. On the weekly, we've seen the majority of the stocks put in that relief rally given last week, Monday's Black Monday scares, right? So why is everybody going to be focused on the stock market? Well, we've had a couple of tests into major resistance and it checked it as resistance, which means SR flip confirmed, except it's the other way around, not support resistance flip, but resistance support flip, right? Testing the support as resistance now and coming down. And you have this full risk off environment, which is currently playing out. And that's why you're seeing gold rally straight up to new all-time highs. 3,288 is the gold price currently, and that's following the breakout of the cup and handle formation. So the way that I'd view this over here is you have met the target, right? We played this out long ago, coming into the parabola, perfectly testing with that handle, and you put in the big move over there. Anything that comes above this point over here is really just gravy, right? Ultimately, I would have viewed that gold has fulfilled its move over here. And then we have the DXY, which is also testing the underside now as resistance. Prior support being tested as resistance, which means the DXY is probably going to continue towards the downside. But the interesting thing when it comes to the DXY over here is typically when we see the DXY running towards the downside, we typically see risk on assets rally. Unless something is breaking within the economy, which is exactly what we're seeing, then you have a flight to safety, which is why gold is running towards the upside. So it creates a very interesting place for the crypto markets because Bitcoin is meant to be viewed as digital gold or gold 2.0. But really, in reality, it trades exactly the same way as what we see the equity markets trade. So if we want to know what happens next with Bitcoin, we really have to look to what happens with equities. And if you look at equities over here, we've had multiple tests into the 50% level, which is ultimately a major area of support, which you want to flip, or at least it's resistance now, but you would want to flip that into support. So you can see over here, test point 1, test point 2, checked it as resistance and price came down. Attempted the relief rally into there, missed it on the next day. The following day, which was on Monday, came back, tested as resistance. Tuesday, tested as resistance, and you're struggling to get back above this key level, right? So that is going to be one of the do or die situations for the market. And this is the question you need to ask yourself. Is this a lower high which is currently forming, or is this just a chop, right? Is this just a choppy range where you're going to see the stock market chop between these two zones while they fight out the tariff wars? Well, time will tell, right? Time will tell. But as it currently stands, the message remains exactly the same. And the message has been you basically in a risk-off environment until such time as the stock market can reclaim some of these key levels over here, which is where some of the impulsive move towards the downside occurred. That breakdown level, we said we need to see price getting above at least 5,700, right? At least 5,700. So you need to see something like this to attempt to reverse that trend. And why do we look at this again? Because we look at the stock market to see what Bitcoin and crypto is going to do. Remember, this is still also in a very low volume environment. So this rally towards the upside, the volume bars were diminishing as that occurred. And that tells you that there's a high chance of that rally failing and continuation, at least back towards the lows, possibly even down towards new lows. So I know probably not the exact message that many of you want to hear, since I ran a poll to determine where the majority of your pockets lie. And the answer is more than 50% of you have 60% or more of your money exposed to the risk on markets, which means that you probably don't want to hear any bearish message. But It does come with a but because there is an opportunity for short-term long trade. I'll show you what that would look like in today's show. If you want that, smash the like button. Also stay until the end of the show, as I will be covering it over there. And that would put you in a position where you could offload some of those spot positions over here to reduce your risk. And then all that you're waiting for is your only chance of loss is opportunity cost, but you're not going to lose any real money at that point, right? Your opportunity cost would then be getting back long if some of those key levels are reclaimed. So that is the stock market. We can see the QQQ would expect it's going to follow through in exactly the same way. We do have to wait for the stock markets to open later on today, and we'll see what that does. Dow Jones is going to look very, very similar to the S&P 500, stuck below that key 50% level over there, testing it as resistance. We have NVIDIA. They said they're going to be moving the chip making into the US, but does the chart like that? Well, probably not, because you do have the RSI coming into that trend line over there, and you're still stuck below the 50% level, which does meet up, of course, with the 200 moving average, which means that any rallies that occur from here are most likely dead cat bounce relief rallies, where it's going to get slammed back towards the downside at a later stage. Remember, the dead cat bounces can be highly emotional phases that put in some of the biggest rallies, right? Sometimes following the biggest down days, you literally get the historic biggest up days just a day or two later, because those relief rallies can be very, very violent. Now, expect volatility. Why should you expect volatility? Well, remember, today is the day Jerome Powell will be coming to speak, right? That's 9:30 my time. I think that would put it just after the US stock markets have opened, if you are in the US time zones. And he's going to be speaking specifically about inflation and how the market is doing, right? So prepare for that volatility. If we go to the CME FedWatch tool over here, you can see there's currently an 80.9% chance that they're not going to change anything with the interest rates. No cuts. Nothing's going to change leading into the next meeting. And the next meeting is coming up on the 7th of May, which is a couple of weeks away, around 3 weeks away, right? So as it currently stands, Bitcoin coming into key resistance over here, similar to the stock market, checking that level as the prior support level as resistance. And so far it's been checked as resistance, 86,500, slap bang to the exact tick over there on the 21 weekly exponential moving average. Have a look at that. That's absolutely unreal. And we'll see if there's going to be follow through towards the downside, right? So a lot of volatility. Remember, there is always an opportunity if you're quick and nimble to play both the long and the short side within these markets. But generally speaking, if you're a longer term trader or investor, well, it's risk off, right? And if you want any more proof for that, just look to gold, right? Gold rallying like this tells you it's absolutely a risk-off environment. And we spoke about this a lot. As long as Bitcoin remains underneath the 21 weekly exponential moving average, and specifically it's angled towards the downside, which it is, then you continue to remain risk-off, right? That still is the same stance. Nothing has changed over here. So if you're ever confused, just look towards that. And then we do have major support, which is going to be coming into this key demand zone in the yellow box over here, which is situated between $60,000 and $70,000. And we do have this upsloping supporting trend line over here, which also lines up. And this depends on when that level gets hit. If you had to drop in one single candle like Mantra did, well, you'd be looking at $64,564 as the key and major level of support. And I mean, theoretically, you could still keep some of the bullish macro hopium alive, in the sense that, well, you could be putting in a major macro high low over there, right? So time will tell when you do get into these key zones. At the very least, even if we did hit that zone, I would expect a relief rally, right? A sizable relief rally, possibly even up to $95,000. So why is this important? Pay attention to all these price times where we put in these major lows over here. What you'll find is if you go through to this chart over here, we do have the RSI, which was downtrending, right? I covered this with the Whale Remembers Live yesterday on the Zoom session. And one of the things that we're looking at is how many people are calling for the weekly RSI to have broken out. Now, you need to wait for the weekly confirmation close in order to determine if there is a breakout. If there is a breakout of this, that would be a strong signal that the bulls are likely to take back control and that maybe the low is actually in. But until that happens, you have to treat the trend as your friend until the end. And this is what we previously saw. Constant rejection. There's a lot of excitement that it had broken out, but until it had actually broken out, the low was not in. Now, that means you won't buy the exact bottom if you're waiting for that confirmation signal, but you can still catch a big trending move. And you can see what it looks like by focusing on the yellow lines, which is where I marked off exactly where the prior times had actually broken out, right? So this is where the RSI actually started to break out. And if you focus on those yellow lines and now you overlay that with the price action, you can see you're still capitalizing on a big part of the move, right? So let's just quickly contract this a little bit. If you wait for the confirmation, you know you're not buying that exact low, but you're buying on the next weekly candle, which still catches you in that move. You're not buying the exact low over here, but you're buying on the next weekly candle, which still catches you into that big move. So it makes much more sense to maintain a risk-off approach and to protect your capital during one of the most uncertain times that you've probably seen within your lifetime when it comes to markets, right? Gold soaring to new all-time highs, right? That is definitely a big warning signal. So although people are calling this a breakout over here, remember the week hasn't yet closed. So what that means is that this could easily be back down here. And then you're just going to negate that circled area. It's currently above because if price closes anywhere here or higher, then yes, the weekly RSI would be breaking this downsloping trend line, at which point you could say maybe, just maybe, that is a major low. So we'll wait patiently for that to play out. Remember, this has been a pretty critical key level for the RSI. We've spoken about that a whole lot. The significance of the RSI holding specifically that 40 to 45 region, right? And that 40 to 45 region has lined up with a lot of these major lows that we've seen here on the weekly chart. That, and then you would be expecting something similar, right? So keep an eye out on those key support levels. It requires a lot of patience, you know, waiting for any sort of a proper confirmation and a break. Don't FOMO in with big positions until such time as you have that confirmation. So this chart is still bearish. Bears are still in control as per this. Really, bulls only take back macro control if you get back above $93,000, which is your underside retest, where you're probably going to test that as resistance. Looking over here at Bitcoin, you can see constant rejective candles coming into the death cross. We spoke about that on both the stock market as well as on crypto. You typically see a rally into the 50 and 200 moving average, at which point when they've crossed that rally, test that as resistance. And if you do test that and you fail at that level that we call resistance, that we label that the kiss of death, right? That's the kiss of death over there. It's not confirmed yet. There's always a possibility, as I'm going to show you now, that you could rally up a little bit higher. But if you do reject here and you're unable to get back above yesterday's high, consider that the kiss of death, which means you have to look down towards the next major level of support, which gives us double confluence. Confluence number one, strong horizontal support. Confluence number two, the midline of this parallel channel, which has been governing price towards the downside. And that comes in all the way at $66,000, right? And then you can line that up with the high time frames, such as this, right? Your upsloping trend line, such as this chart over here, meeting up also a strong horizontal and your upsloping trend line, which is the most conservative trend line that we can draw over here for the bulls, right? Okay, cool. So let's continue on over here. Remember, we're going into the Easter weekend. We did refresh this yesterday. It usually comes out just after my show. So I'll once again be curious to see what it shows today. This is how much money is coming onto exchanges, which shows retail buying interest. Are retail coming back into the market or not? It's taken from major exchanges like Coinbase, Binance, Bitfinex, and other big exchanges. And it looks at Bitcoin, Ethereum, and Solana, which are the most tradable assets when it comes to crypto. And it's lower lows and lower highs, which is also showing you a downtrend. And we'll see later on today in a couple of hours' time when I refresh this, if we're going to get aggressive downside moves like we did previously see over here, that would be a strong indication that, especially leading into the Easter weekend, the long weekend, right, that there could be trouble on the horizon, right? So if we do get follow through over here, remember lining that up with the kiss of death, that would be confirmation that you failed at a key volume area, right? You got another high volume profile bar over here. And if you start to drop and hold below that, that acts like resistance, right? Multiple closes below that volume bar at 82,600 would probably accelerate price down into the $72,000 region, which, remember, is our fair value gap that we've been targeting for a very long time, right? There is your fair value gap running into that area over there. And you can see the little volume pocket within those zones, right? So price tends to suck magnetically into those volume zones. So I'm measuring the volume taken from the low before Trump came into power, and it obviously got priced in that he was going to win the election, and now you may go for the full retrace, right? Something like that. So keep an eye out on that until such time as you can break convincingly and hold above this trend line over here. It's a downtrend, lower lows and lower highs. We may lower this orange line over here. Currently, we're still keeping it as validation for the bulls are back, or invalidation for the bears, if price can get back above that orange line, which is 88,744. If this does reject over here and we start to close multiple candles below, especially if we took out $78,000, we could confirm this as the lower high, which becomes the new invalidation or validation point, which means we'll drop that line down to about 86,500. And this is the way the downtrends work, right? First, the line is over there, then the line is over there, then the line is over there. And so the downtrend persists, right? The trend is your friend until the end. Okay, cool. So we got that over there. We got the liquidation levels, which are situated above price right now, which means that the drawn liquidity could be towards the yearly open. This is where the long trade setup does potentially come into play in the form of a possible short squeeze. It's always possible, especially in a low volume environment. One big market maker has to come in, or big player, or whale, and they decide which way they want to send price. They engineer liquidity. We spoke about that if bears don't have enough momentum to get price to the $72,000 level, they could engineer liquidity by drawing more players in with FOMO, bringing price up into this key level and rejecting, which means you want to pay attention to both sides of the trade. And that's exactly what we spoke about yesterday. We said, watch for the swing failure pattern. We spoke about building the short trade position over here based on the deviation of the Monday high. And you wanted to trade that all the way back down to the Monday low. That was the short trade setup. And then we said, if we do sweep the Monday low, watch for the Monday low into potentially even the monthly open. And then you want to look to reposition for the long trade. So we've now got that, right? That trade played out absolutely perfectly. The short trade is now your hedge. Would I close that short trade? No, I wouldn't. The short trade is a hedge in the event that you lead into a deeper market drawdown. So if you did take that short trade over here, all you need to do is pretty much move your stops to break even. You have absolutely no chance of losing this trade. It's a free trade over there. And now you want to look to reposition for the long side. If the trade does start to play out over here on the long side, what do? Again, you take your stop loss and you raise it into break even, at which point price between those two levels gives you a free trade in both directions. And whichever one wants to break out to present the next real move positions you on the right side of the trade. If it moves towards the upside, the short's going to stop out at break even, but the long is going to pay you dividends. If it breaks towards the downside, well, the long will stop out very quickly at break even, and the short trade is already paying you dividends and will continue to do so. And that's what real trading is. So what are you looking for over here, right? This is a pretty key point within the market. You're looking for some sort of a swing failure pattern. Observe as price approaches the monthly open. You're looking for something like this in the low time frame, right? You're looking for possible sweep below, $82,000, $88,000. You never blindly take the long trade, but if you do see something like that and you start to get a bit of a spike up and a reclaim, you can take a sneaky little long over there. If it can reclaim the Monday low, you know that you're in the money. Move your stops to break even and start to target the upside liquidity. Where's the upside liquidity? Well, we just covered it. Here's your upside liquidity. Your upside liquidity is at just under $87,000. That is where the majority of the short traders' stop losses are. So you may have essentially just come through over here, deviated, stopped out all the longs over there, and then deviate again and stop out all the shorts over here. Those are the trade opportunities in the short term. If things get really, really crazy and heated over here, you could target as high up as the yearly open, right? So it's a worthwhile risk to reward trade. Again, that's what it's about, right? Is figuring out the risk to reward. If you can find a very, very good trigger entry into something like this, take the long trade, deviation back above the Monday low, and you can say now you start to target possibly even as high up as the yearly open. So trading is about playing the probabilities and letting the market do the rest. No one can control which way the market is going to go. All we're trying to do is predict which way it's going to go and take the trade when the probabilities suit us the best, right? So another thing over here that supports the thesis that, maybe you might get some sort of a swing failure pattern over here and have the opportunity for long trades to be set up is if you do look at in the shorter term over the hourly, you did get negative funding rates coming into this key zone over here. Open interest has come down quite a lot. And if bulls are attempting to take back control, most of the time when you get that negative funding, you do find a major low, right? And that's something to pay attention to, right? You can see over here, negative funding. You did come a little bit lower over there, but ultimately that was the low, price spiked up, right? Negative funding, that was the low, price spiked towards the upside. So you're looking for into that key level, a little bit of a low. If you do want more information on this, guys, jump into Whale Room. I will guide you along the way over there. I'll drop some charts following the show, right? For the rest of you, there is opportunity. We still have the bots which are trading for us over here. That is the Sol bot. So the general idea on Pinex is that as price moves down into the green, that becomes the buy zone. As it pushes back up into the red, it starts selling, right? So these bots are doing really, really well. They're in profit. You can create your own strategies over there on Pinex, and you can actually claim up to $1,000 sign-up bonus if you do sign up using that link. And if you do want to follow these, you can pretty much just copy them, click the links in the description below. 307% APR on that particular bot over there. All right, let's continue. USDT dominance. This is a big one to look at as well. You can see it has been respecting this trend line. It was grinding into there. Really, really looked like it's going to start to break down. You started to get the move up. This has still been a pretty aggressive sell-off over here, which means that you should still look out for the possibility of a lower high, right? This is going to dictate where Bitcoin goes next. Of course, if it does break down, Bitcoin's going to squeeze to $95,000. If this continues to push up towards the upside for our ultimate target, which is the midline over here, lining up with the pink box, which is a strong horizontal resistance level. Well, if it does manage to squeeze up to this level, you're probably going to see Bitcoin all the way down into that 60 to 70K region, right? So pay attention to this. This is an important chart to watch. It will help you to eliminate a lot of the noise. ETH BTC is getting ever closer towards the next target, right? Whether it's going to hold this target or not, I can't say, but it is an important one to look at because it's based on those lows, right? You might sweep the lows from 2019. It's absolutely unreal, guys. It's absolutely unreal. I cannot believe it that something as big as Ethereum would get into this kind of a state. Thankfully, I'm not positioned on the wrong side of this trade, but I can only imagine how those who are must feel. So I would be watching for further squeeze all the way down. It's getting more and more aggressive, right? Think of this like an inverse parabola. Parabolas break eventually. They don't just continue all the way down. So think of this as an inverse parabola, right? So you're looking at that. Inverse parabola, eventually when a parabola breaks, it corrects 70 to 80%, which means that you could see a massive, massive squeeze over here. So I wouldn't pull the trigger blindly on this, but pay attention to that 0.01656, which is the yellow line. I think you'll sweep that level. We said 15% down. We're squeezing ever so slightly. We got now 14.6%. There is still some more price action towards the downside. And then you're looking for the deviation, break the parabola, and then I think people move into that. Probably heavily based around whatever the Fed are going to do next and what Jerome Powell is going to say. Everything still holds a bearish thesis, but understand that could change as soon as today. If Jerome Powell comes out and says some absolutely wonderful, magnificent things for the markets, like we are going to 100% stop quantitative tightening. Remember, they haven't stopped it. They've only slowed it. If he comes and says we're absolutely 100% stopping quantitative tightening, that could be enough to spark the next move. And if he comes and says, well, we're 100% stopping quantitative tightening and we're going to move into quantitative easing because the markets are getting damaged and we're here to save them, that means the money printer turns on, and that's where you get your COVID 2020 style rallies, right? I'm not calling that. I'm just taking it as it comes and waiting to see, what he does, right? So Bitcoin dominance, similar to gold, just continues to pump towards the upside. So Bitcoin acting as gold of the crypto market, but definitely not as gold of all markets because, of course, we're still like 25% off of the overall highs, whereas the stock market is probably 25% above the highs from the beginning of the year. A little bit of a different picture over there. But Bitcoin dominance rallying towards the upside, probably going to take out that wick high over there. Remember, 66.27% is your 0.786 level. What I might do is I might actually just throw something else on over here and look for weakness in between these two zones. Let's just quickly run this towards the right-hand side over here. Let's put our values. There we go, on the right-hand side. So you can see that nicely. I'll kind of be watching for this level next between 66 and 69% for weakness. Now, if you do get weakness on Bitcoin dominance, the only way that happens is if something good happens to the market. it's very rare. You're not going to see Bitcoin dominance drop unless the market is feeling optimistic. So there could be a good indication by following this chart when things may get better. I mean, we're running a trajectory over here, and if we just continue at this path, well, according to this, that could be sometime in June, right? If you continue at this pace, sometime between June and July, maybe that's when the tides begin to turn in this box over here. We'll keep our eye on the price, right? On that box over there. Also, just a quick mention for those of you going to token 2049, there is 10% off if you use the link in the description below. I don't get anything out of this, just so you guys know. It's just for you if you do want to go to token 2049. The early birds were 500. You could have got it for like around something like what, 450-ish if you use the link before. Now they are $8.99. So if you do want to use that link, I think they're almost sold out. You'd have to do it pretty soon if you want to come. That's in Dubai, right? That's happening next week. I will be there. For those of you that are there, come and say hello. All right. Cool. Pinex, links are below. Also, if you do want to join in that, guys, if you want to learn more about trading, of course, we do have Whale School, right? We are currently taking signups. Click that link over there. Join, jump into Whale School. You have to use one of the exchange links below to get in, but we'd love to have you there. It's $2,000 to join, but if you use one of the links below, you can join actually for free. And then the last thing I want to mention before we take a couple of altcoin requests is, of course, the newsletters. Remember, there's a lot of alpha in the newsletters as well. If you haven't joined the newsletter, join the newsletter. It goes out Monday to Friday, right? All right, cool. Let me know in the comments if there is anything else that you guys want to have a look at, anything that you think is urgent that we need to bring up. I will do that. I'll bring that up. We can do a couple of altcoin requests. Let's have a look at quickly Mantra. I see some of you still want to see Mantra. Let's have a look at this chart over here. Okay, so Mantra, I saw it's like up 25%. Of course, it is going to have some moves, but I think it's very much wishful thinking if you think this thing is going to recover all the way up to the top over there, right? It's just probably not going to happen. But in terms of low time frame DGen traders, your range is set. The Monday high, Monday low looks like the trading range. Watch for the sweep of one and then trade it towards the other direction. Meaning if you do sweep Monday low and reclaim, you can look for the long trade towards the high. But this is going to be for, smaller trade sizes, right? Like smaller pockets. You're not going to go in with hundreds of thousands of dollars, sweep the high, trade it towards the low. I think eventually it's going to come back into the zone over here as well. Anyway, it's probably just, slowly going to bleed into that. I know they want to do buyback and burn mechanisms and things like that, but yeah, not a good look. Charts like this almost never recover. Actually, I should say they never recover. I don't think I've ever seen one that's ever recovered. So that's where your odds lie. All right, Solana. Yeah, we can have a look at Solana. Let's see what Solana is doing. Let's go into the daily chart over here. So it's testing the monthly open right now. This is very, very similar to Bitcoin. Most of the charts, what you want to do is track that monthly open. So you do this on a lower time frame. If you can manage to hold the monthly open and start to break back above the Monday low, you have an invalidation point for a long trade setup, right? So you're looking at something like this. Tagging the monthly open, if you can get back into the range above the Monday low, that opens up the long trade, right? Long trade at Monday low, stop loss below those lows, and you're targeting up to potentially as high as the yearly open. I don't think Solana can squeeze that high. I think probably previous month's mid-range is probably a more realistic area of interest, right? You can see over there, that's your prior rejection point. But you want to do this with extreme caution and very, very good risk management because the overall trends are towards the downside, but understand you can get big relief rallies, right? Okay, let's look at Sonic. Sorry, you said Sonic over there in the comments. So for Sonic over here, we've already swept the monthly open, right? So if you reclaim yesterday's low, Monday's low, you also simultaneously reclaim the Monday open. Sonic doesn't look to me like it's going to do that the way this current price action is unfolding. So therefore, I'd probably look down towards the golden ratio over here, or the golden pocket, the 0.618 to 65. That's coming in between 43 and 44 cents. Okay. What else? What else do we have? Render. We can have a look at Render. I haven't looked at Render for a long time. I'm actually curious how it's doing. All right, let's quickly see on the daily time frame. Okay, so look, I mean, it's not great because this was clearly a major demand area to lead these big moves up, big bounces off of those zones. And now you're kind of testing that as resistance, right? Multiple tests into that zone, resistance, resistance, resistance. So there are no swing trades. There's no swing trades, no long-term trades. Any trades that you're taking are going to be shorter term trades, right? And you have to be aware of that. If you want those trades, I really recommend, look into the Discord over here. This is where all the short-term trades are being dropped, right? So if you want those short-term trades, we do have short-term traders there to serve you. Okay, what else? What about the best performing asset, XRP? Okay, let's have a look. We can see XRP. XRP, where is it? Okay, let's search for it quickly. XRP USDT. Okay, XRP. Well, it definitely doesn't look to me like the best performing assets. We spoke about taking the short trade over here at the red line. If you get acceptance back above that red line, then the short trade is invalidated. Right now, this is coming down. I guess similar to the rest of the markets, look, you're already losing the monthly open, which is not a good sign. If things are going to hold up bullish in the short term, what you'd want to see is you would want to see that monthly open hold, right? You'd want to see price wick into it, hold the monthly open, reclaim the Monday low, and then you have the possibility of the short squeeze. That's not happening. Right now, you are deviating this key level, right? So deviation of that key level. Look, you have to look towards what Bitcoin is doing, right? Right now, until you can get back above the red line, it's risk off. 2.14. That's all I can say. 2.14. You need to get above there. Near, let's see what near looks like. Straight lower lows and lower highs, not looking good. Below the previous month's low, also below the monthly open, below the Monday low, just straight downtrend, right? So yeah, next levels of support, little bit of support coming in over here, just under $2. Little bit of support over there. Okay, none of these charts are looking good, right? There it is. There's your picture. Remember what we spoke about? We said, even though you've broken a trend line, have a look at that. Even though you broke the trend line, which direction is the trend line? All you have to do is put a little arrowhead on the end if you want to know. That's your trend, down. All right. Cool, guys. Also, you can ask us questions in Ask the Team section in Whale Room for the Discord members. If you do want anything specific, just let us know, the time frame and what we think of the chart. The team is there to help. So tag Josh, Chris, Farouk, any of the other traders that are in there, you can tag us. All right, Popcat. Let's have a look at Popcat. Popcat. Where are you? Here we go. Okay, let's see. So we spoke about this yesterday. We said, for Popcat, it needs to break and hold above the clear range level. This is your range high. If you can gain acceptance back above that range high, there's a chance of a short squeeze to the yearly open. But you don't want to be holding any Popcat into that yearly open. That's where you want to exit that position. That's coming in at 74 cents. All right, guys, that is it from me. Let's save the rest for tomorrow. I hope you all have an absolutely wonderful day out there, wherever you are in the world. And I will catch you all on the next one. Cheers for now.